US30 trading was so difficult until I discovered this one strategy. So today we're going to be discussing a trade that I took on US30. The strategy that I'm going to be talking about today works in indices, Forex, crypto, all of it. I'm going to be showing you guys how I use the same strategy that I've been talking about all this time to also capitalize on a trade on US30. And it actually once again derived from a comment that one of my subscribers dropped on my video. So that's why it's so important to drop your comments below, because I would most likely respond to some of these comments in videos. So here's the comment right now. So the comment basically just said, does the strategy work in US30? And so we're going to be breaking it down today. So here is US30. I've taken off all my annotations for now because I want to break down what I saw in US30 before I enter the trade. As you guys know, US30 is an absolute beast. It moves all kinds of points. It's one of the biggest movers out there. Because it moves so much in such a short period of time, you're afraid to trade US30, especially when you're starting out. You find it hard to even jump into trades because you're constantly being stopped out. US30 done blew so many accounts of mine. But then I had to start looking at US30 in a different way. I know some of you guys can relate with that as well. US30 is done blown your account. Drop a comment below if US30 is done blown your account. I know I'm about to see about 100 comments just saying, yep, I done blew my account in US30. US30 is absolutely just bullish. Technically, you want to be long, but the position that I took was a short position. So here you can see prices just making higher highs and higher lows. And you can see over here, what happens over here. We've made a higher high and we've made a higher low. As prices responding off of this up close candle here, so there's an up close candle from here all the way to this high. As price is responding to this up close candle here, you can see that price is rejecting. So this is where I'm going to put on some markers real quick. I've marked up my up close candle first of all. You guys know about my institutional candle series. If you don't know about it, definitely watch that series after this video. And so I've marked up my up close candle over here. I've actually got it from the 4-hour time frame. And I know that my down close candle is from this high to this low. I just haven't marked it up yet. Just so you guys can see it, this is my down close candle. So I've basically, this is my down close candle. I could have just expanded it all the way to the right, but I'm not doing that, okay? The reason I've highlighted that is just to show you that this is the range that we're trading in. So this is our low over here, and this is our high right up here. That's our range that we're trading in. Price is responding off of the up close candle. And so since price is responding off of the up close candle, you want to see price push lower. If you're bullish on this pair, there needs to be a point where price should hit and then continue to move up in your direction. So this is why I marked up this order block over here. This is where I want the price to return to before looking to go long. I'm going to go down the time frames now to show you guys what happened. Just remember that what I've marked up the very high of this order block. The order block is from the high to the low. It's from wick to wick. And so I've marked up the very high of the order block, and this is where I want price to go to. So now I'm going to go to the 1 minute time frame to show you guys how I capitalized on all of this. And just bear in mind, price did push lower more. It's just that if I press play, it's going to show you a bit too much information. So now we're on a 1 minute time frame. People always ask for the time, like what time frames do you use? What do you use the 50-minute time frame for? What do you use the 30-minute time frame for, and a 1 hour time frame, and so on and so forth? And I always tell them, look, the time frames I use is I always start off from the higher time frames and normally from the daily time frame. And then what I'll do is, if I'm looking to catch an entry when price is in my point of interest, what I'll do is I'll just go into the lower time frames. And my lowest time frame I go to is the 1 minute time frame. That is the time frame I look for entries. So I literally recorded the whole video, and then a few days later I actually realized that I missed out a few parts. So I'm going to go ahead and run it back, and this time add in all the bits. I'm telling you right now, there's so much within this little short piece of price action. We can't miss these things. So now we're on a 1 minute time frame. There's a few things I want to see. You guys know that I want price to drop to that daily order block. You can see right here there's the institutional candle. If you guys don't know about institutional candles or institutional trading, I've done a whole series on institutional candles, so definitely check it out. You can see there's an up close candle here. You have to remember, if I want price to drop, it needs to drop from somewhere. This up close candle over here takes out the liquidity that's resting above these equal highs, because you guys know who's going to be selling from up here. You know, there's going to be people who trade retail concepts. They believe the whole double top and the double bottom hype. They'll either sell when price rejects. And the funny thing is this as well, this candlestick's rejection from this area engulf all of this. So, you know, this is another thing that they'll be looking at. They'll be looking at not only is a double top, it's also an engulfing. Surely price is going to drop. Those are the early sellers. They normally get wiped out with the up close candle. But even though price ran up this high, it was still a high risk trade. The reason being is because there was inefficiencies to clean up above. So that's what makes it high risk, that there's still things to clean up above. There's inefficiencies above, there's imbalances above. And so this is why I did not take the trade from up here. So this is the first up close candle. What confirmed this was an up close candle was when price broke beneath the short-term low. And then what kind of validated it is that it went and broke structure to the downside. It broke this low over here. And so knowing that this trade here is high risk, so I know that the next time price returns up here, it's still going to be high risk. It's because there's still not much data showing you that price wants to drop lower. But it doesn't mean you can't take that trade. So you can see price here, it broke the low, then price traded back up to mitigate this up close candle because they would have been in drawdown over here. And so you can see price spent a little bit of time mitigating. So this is where I entered the trade. I entered off of the first up close candle. So when price came up to mitigate the up close candle, and specifically when it pushed up higher, broke lower, giving me signs that it's going to drop and then retrace back higher. Here at this wick just above here, roughly a bit higher, there we go, and I put my stop loss just at this high over here, roughly about just at that high. And then what I was doing is I was targeting the daily wick high of that order block. So now you can see the daily wick high of the order block. So this is what I was targeting, and so that's where I want to see price go to before it reverses and goes higher. So don't forget, this is still high risk. Like I said, there wasn't much data telling me that price wanted to go low. There was no extra confirmation that price was going to drop lower. So I'm going to go ahead and replay what happened from here. Okay, cool. So I'm going to pause it. Went too far. Let's go back a bit. All right, lovely. I wanted to explain to you what actually happened here. Let's look at what's happening with structure at this point. You see the very high. We get the break to the downside. We get that push back up to mitigate the up close candle. And then look what happens. We get another break to the downside. So I'm going to quickly take this arrow thing right here and I'm going to pull it down here just to show you that price actually did break the low. There you go. So you can see price actually broke the low. And I know what you guys are thinking right now. You're probably thinking, look, but it never broke the low. You know, it wicked beneath there, but the candlestick never closed beneath the low. Let's be real, you know, in our retail days, when we're learning those retail concepts, one of the things that we're learning is that price needs to break beneath that low, needs to close beneath that low. You have to actually think about it. On a lower time frame than this, price traded beneath this. If they didn't want price to go lower, then they should have protected these lows. Just like here, they didn't want price to go higher. When price came up to it, what did they do? They protected the highs and then they pushed lower. You can see here, price never got above the high. So what I'm trying to say is if they wanted to protect that low, if they wanted to create a high low, they would have done it. But they never did it. Price wicked beneath the low, it's still a break. Comment down below whether you've heard that before. The price needs to close beneath the low and close above the high. Listen, wick breaks are still valid. So let's move on now. Price has responded now off this up close candle, this one here, and it's broken structure to the downside again. Everything here is valid now. So that means when it returns back to the second one, this is where you catch a low risk setup. Why? Because price has already responded off the first one and broken structure to the downside. So that means the second up close candle is going to be the low risk setup. So if you wanted to, you could have caught a trade from the up close candle and then you could have targeted the low, or you could have targeted the daily OB. So I'm going to continue to play now to show you guys what happened. So I was still in this trade. I wasn't risk free in this trade or anything yet. I wasn't risk free in this trade. I didn't get stopped out. You guys saw on Instagram, I posted the fact that I was in US30. And this was actually the very last trade I took for the whole year. Let me hit play. So as you can see, first I'm going to pause it. You can see price did not come to my entry. It continued to push lower, as you can see. And then I'm going to hit play again. Boom. Let's go. There we go. So now I'm going to quickly just drag this up a little bit. There you go. The reason I was very confident that price was going to hit this, if you're bullish, then you want price to respond off of something and then continue to be bullish. And so this is why when it ran the low, it wasn't enough. The wick high was so close to these equal lows. And this is still equal lows to me, just letting you guys know. Yes, it's broken structure, but it's relative equal lows. These lows are close together. Retail traders would have been seeing some kind of double bottom here. If they didn't see it from the wicks, they would have seen it from the bodies. Yeah, these bodies right here. So they would have seen some kind of double bottom there and they would have been buying. Obviously, if they're buying, their stop loss is going to be somewhere in this area. And then you have to think about it. Once price wicks beneath these lows, their stop losses are being hit. For every single buyer, there must be a seller. For every single seller, there must be a buyer. So if they're buying it and price hits their stop loss, they sell their order back. And so there needs to be someone now who's going to buy at that point. From these levels, according to your trading plan and your entry setup, you could have taken a buy, you know, and targeted a high time frame point of interest. But as you guys know, this was my target and that was my very last trade of 2021 and it absolutely vibed. Even if you caught that low risk setup, you could have entered when price came out right into this level over here. Then you could have put your stop loss right above this high, this wick high over here. And then you could have targeted the exact same point over here, and you still would have caught like a 1 to 9, 1 to 10 hour trade. That would have been a phenomenal trade. This is the strategy that I've been using on US30. If you're not confident taking that high risk setup, always go for that low risk setup. You can see at all times we're always trading towards some kind of money. Money's being taken out of these lows, and then it's tapping into our point of interest, and then you're Gucci. I used to struggle with US30 back in the day, but this strategy made US30 an absolute vibe. Peace.